Here's a look at what's happening next week. Our Friday market monitor is Bernie Schaefer, chairman of Schaefer's Investment Research. On the economic calendar, Monday, October's leading economic indicators. Wednesday, the weekly reports on jobless claims and oil and gasoline inventories. And Thursday, the markets are closed for the Thanksgiving Day holiday.
My guest market monitor this week is Mark Leibovit, Chief Market Strategist for VRTrader.com. And welcome back to Nightly Business Report. Mark, great to see you.
Always glad to be here, Paul. Thank you.
You know, a lot of analysts see the recent upturn in stocks as the start of the traditional year-end rally. Do you buy that, or what do you believe if there's something else behind this rally?
Well, I think we have a real market here, Paul. This is more than just a year-end rally. Yes, we may see a little profit-taking after Thanksgiving, and there might be some hesitation along the way, but I think this is a multi-month move that could carry anywhere from March to next summer. We saw a washout technical pattern in October, which in a way mirrored what we saw in 2002. So I'm looking for a much more dynamic move here, lasting several months and to dramatically higher levels.
So staying power it has, but as a technical analyst, what are your target levels for the Dow? Let's start with that.
Well, I don't know if we're going to see the next several months, but I think over the course of the next year, you could really see this Dow take off. I think going through that 11,400 high up to possibly 13,000 is a possibility.
And here we are at 10,766 today.
Right, and I'm looking at the NASDAQ Composite, possibly at 2,700. It's around 2,200 right now.
Right.
The S&P short-term target 1265, but I think we can get up to about 1430. So, I mean, there's some dramatic numbers here. If you look back, and you have to step back a bit. You got to look at the weekly and monthly charts, not the short-term daily action, and see what's really been happening here. And this market has been climbing a wall of worry all year. They just can't knock this market down. With all the news stories, worry about the war, potentially higher interest rates, overspending on the part of the government, on and on. This market's been telling you it's just pent up, building a base, building cause, as they call it, to take off to bigger and higher levels. I know it sounds uncanny, but that's what it looks like.
You're as bullish an analyst as I've come across in a long time.
Well, this might be the final thrust of the move into 2007, but it's there.
On your recent visits with us, you said you were very bullish long-term on gold, but its rise would be hampered by a strong dollar. Well, both of these things have been rallying sharply. What's going on here? How can they both do this?
Well, you know, this is the problem in tying markets together inversely. In fact, I cautioned when I was on in May, you got to be careful about this, but at that time, that's what it looked like. In August, they diverged. The dollar, as we predicted, continued strong, may continue strong. Dollar is its own world, gold's in its own world, and gold just took off here. And, of course, we're sort of perennial bulls on gold. We have this vision that we're in a 15 or 20-year bull market, so we try to keep positions.
During your last visit on May 20th, you had two buy recommendations. Let's have a look and see how they've done. Coca-Cola just can't seem to get out of its own way. It's down 6% from 45 to 42 and a fraction. And America West Holdings, now, this was recommended at $5.17. It was merged into U.S. Air Group, the new stock, right?
Correct, and there was a 0.40 conversion between the old stock and the new stock from the American West shareholders to the U.S. group.
So that would be a big move up. In other words, 4/10 of a share of the new U.S. Air Group, which is 33 or so, that'd be worth about $13.
Right, it's almost a triple. It's unbelievable. Great move on a hometown airline here in Phoenix. Unbelievable. But
do you have any new recommendations, new ones?
Yes, let's look at a few. My number one pick, Microsoft. This stock has been building a base for the last couple, 3 years. It's trading around 28. I see the stock going anywhere from the mid-30s, possibly to the low 40s. Let's call it mid-30s. It's actually been one of the key factors in the NASDAQ Composite acting so strong recently.
Okay. You just have a minute left, Mark.
Okay. Cameco, CCJ, uranium play. This is sort of an undiscovered area. A lot of people have been talking about, but a big move in uranium is coming with the building of uranium plants and so forth.
It's not a big move already.
A big move. I can see it doubling to 100s in the low 50s right now. Number three, with Miramar Mining, MNG, a low-price gold stock. This is a spec. It's about $1.50, but this could be a $4 or $5 stock.
That trades on the American.
Trades on the American. And finally, GLD, which is the ETF for gold bullion. We're looking for 500 at an ounce now and 800 in the next 2 or 3 years. So this is trading around 47. Pure play on gold bullion without owning the gold.
Do you personally own these securities?
I don't own any of these. I try to avoid buying them so there's no conflict. We try to buy them after we recommend them.
Okay, well, that's an interesting way to do it, but you'll like them well enough to buy them eventually.
And we'll try to buy them next week.
Okay, Mark, I want to thank you very much for your observations. Most interesting.
Thank you, Paul.
My guest, Mark Leibovit of VRTrader.com.